talk about how unemployment taxes work in general. So we are going to speak about a small business federal unemployment tax tutorial. Okay, I'm going to give you a tutorial. So this is the employer's ultimate guide when it comes to understanding FUTA and SUTA. So federal unemployment tax and state unemployment tax. Don't you go anywhere. You're going to love today's conversation, especially the granularity and depth and breadth. So stick around. You're going to love it. I guarantee it. Welcome back, folks, to another edition of the Awesome FUTA Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about FUTA, Federal Unemployment Tax, and SUTA, State Unemployment Tax. And so if you are an employer, one of the taxes that you must pay is unemployment tax. All employers pay FUTA to fund the unemployment account of the federal government, which pays employees who leave a company involuntarily. Okay, so businesses also may have to pay state unemployment taxes, which are coordinated with the federal unemployment tax. This is important. So as an employer, your business is responsible for paying unemployment taxes to the IRS and making reports to the IRS on Form 940. I'll speak about the Form 940 later on, but this is actually the form that actually helps you summarize to the IRS your employer's annual federal unemployment tax. So let's talk about the process. How does unemployment taxes work? So in brief, the unemployment tax system works as follows. So employers pay into the system based on the percentage of total employee wages. So you do not deduct unemployment taxes from employee wages. No. Most employers pay both federal and state unemployment taxes. So you have most employers will pay both FUTA and SUTA. And employers must pay federal unemployment taxes and file an annual report. So this happens through the 940, the Form 940. And the tax paid goes into a fund that pays unemployment benefits to employees who have been laid off. That's what I was speaking about early. When a company leaves a company involuntarily, that fund actually serves to help them out. So when we think about the federal unemployment tax process, remember that every employer must calculate its FUTA tax liability for each payroll, set aside an amount after each payroll equal to that liability, because it is a liability. So make periodic payments to the IRS based on the amounts owed, and actually submit, as I said before, the Form 940 to the IRS. So this is an annual form. You don't have to do it every quarter. There is a quarterly form also, but here there's an annual form, the Form 940. We have actually covered this topic on another show. So if you are interested in this topic, just go to our tax folder and just tap FUTA or unemployment taxes, so you have a clear idea of the video. Or you can even drop us a comment below and we'll just send you the link. Let's dig a little deeper here. I want to dig a little deeper here. Let me give you an overview of FUTA. You have to understand. So FUTA stands for the Federal Unemployment Tax Act. Okay, so it helps cover the cost of unemployment insurance and state employment agencies. So you are required, as an employer, you are required to pay unemployment tax. Okay, so every employee working for you, you need to pay unemployment tax for that employee. So this comes out of your pocket, not money that comes out of the employee's pay. This is your pocket. Okay, because I want to contrast this with the FICA, the Federal Insurance Contributions Act. So when we talk about Social Security, there was one portion that comes from your pocket and there is another portion that comes from the employees. But when it comes to FUTA, it's only you. So FUTA is calculated and paid quarterly, so long as your FUTA tax liability is over $500 for the quarter. Okay, so we'll get into details in a while. So you need to really understand that. So at the end of the financial year, you report all FUTA you have paid and all unemployment tax you have yet to pay on Form 940. So FUTA was actually born in the Great Depression. So by 1932, 1/4 of all workers in the USA were unemployed. Okay, so a couple of years later, Franklin Roosevelt FDR declared the country needed some kind of a safeguard against misfortunes which cannot be wholly eliminated in the man-made world of ours. So this was his direct quote. So today, FUTA helps to fund unemployment insurance across the country. So who needs to pay FUTA? Well, the thing is, FUTA is paid by every employer. Every employer. So nothing gets deducted from the employee's wages. If you are listening to me right now, do not deduct anything from your employee's wages. Okay. So you are required to pay FUTA if you paid more than $1,500 to employees during at least one calendar quarter, and you have had one or more employees during 20 or more different weeks of the year. So full-time, part-time, and temporary workers all counts. And the days they work do not have to be full days. So an employee is anyone you file Form W-2 for. Okay, W-2. So contract workers, so people who get Form 1099 NEC, do not count as employees. You don't have to pay FUTA for them. So the FUTA rate is 6% before state tax credit of what you paid an employee during the quarter. So it only applies to the first $7,000 that they earn. So this is called the FUTA wage base. So for example, if you paid an employee $8,000, you pay 6% before state tax credit of $7,000 in FUTA. But if you paid an employee $6,000, you pay 6% of $6,000 in FUTA. So this is important to you to remember. And there is also the FUTA tax credit that we'll speak about that later on. But so there is a credit that you can apply to reduce your liability. So we want to spill more beans on the FUTA calculation. So to actually identify your FUTA liability for the quarter, all you have to do is you want to add up the gross salary or wages for the employee during the quarter. So gross means before withholding things like FICA. So this is important. So you want to add the value of all fringe benefits, and then you want to deduct the value of all exempt fringe benefits as outlined in the instructions for Form 940. Again, if you have questions on that regard, if you have questions on that topic, let us know. Okay, so you want to add the value of the remaining fringe benefits to the employee's gross salaries or wages for the quarter. And then you want to take away from the total gross salary or wages any amount higher than $7,000. Remember that I've said before that you should be left with $7,000 maximum. And you want to multiply the final number by 0.06. That's 6%. So this is what you owe for FUTA for the quarter. And you have to do this for every employee. And at the end, you will see your aggregate FUTA tax liability. Okay, money you need to send to the IRS. Now, one thing I want to say here is that it is always a great idea to set aside FUTA money in advance, because you don't want your wallet to take a surprise hit at the end of each quarter. Then you've got to make payments to the IRS, and then you have to make payments to contractors. You have to run a business, all that kind of stuff. So you just want to set aside FUTA money. Okay, so an easy way to keep track of FUTA savings on your book and make sure that you have enough is to set aside money every time you pay an employee. So the easier way is just to have an account that is separate from your business bank account. So to simplify things, you can carry out these calculations for each employee and set aside a lump sum every pay cycle. So remember, when we talk about payments to employees exempt from FUTA tax, so some of the payments you make to employees are not included in the calculation for the federal unemployment tax. So these payments include fringe benefits such as meals and lodging, contributions to employee health plans, and reimbursements for qualified moving expenses. You have group term life insurance benefits. You have employer contribution to employee retirement accounts like 401k accounts, and dependent care payments to employees. So those are not included in the FUTA. Very important. And you can find the complete list of payments exempt from FUTA tax in the instructions for Form 940. But again, if you have questions, please drop them below and we'll be very happy to answer you. So the type of payments to employees that are exempt from state unemployment tax may be different. So you want to check with your state's employment department for details. Let's talk about FUTA payments. How do you actually pay unemployment taxes? It's important to know because if you set aside some cash and you have a separate savings account that houses your FUTA liability, how are you going to pay the money every quarter? Now, you want to get an employer insurance number. So before you pay unemployment taxes, you will need an EIN. Okay, so if you got employees already, you probably have an EIN. It's not an employer insurance number, it's an employer identification number. Okay, so you need to have an employer identification number, and so this EIN will give you insurance, some kind of insurance that you are legit, because the IRS would have to approve you primarily that you are a legit company and that you are paying your employer taxes on time. So you want to transfer the money. So the easiest way to get the money out of your bank account and into the IRS's hand is through what they call the EFTPS, so the Electronic Federal Tax Payment System. Okay, you can open an account on the main page of the site. You will need your business information, including EIN, your contact information, your bank routing number to make the transfer. Very important. So when do you have to pay FUTA? Well, this is where it gets a little tricky, because even though FUTA payments are quarterly, you may not have to pay every quarter. Here is why. Let's say at the end of the quarter, if you owe less than $500 in unemployment taxes, you don't pay. Instead, you carry over the amount into next quarter. Say at the end of Q1, you owe $300 in FUTA. So instead of paying, you carry it over. Then let's say that for Q2 alone, you will owe $300. So you want to add that to the $300 carried over from Q1, and you end up owing $600. So after Q2 ends, you should send the IRS $600. So this applies for as many quarters as it takes to build up to that $500 minimum. So the IRS just wants you to have that $500 minimum before actually contacting them for a payment. So here are the FUTA quarterly payment deadlines. So we have April 30th of the year, you have July 31st of the year, you have October 31st, and you have January 31st. So it's basically the end of the month following the close of the quarter. So the IRS wants you to pay them 30 days after you close your quarter, 30 or 31 days. So again, the deadlines are April 30th, July 31st, October 31st, and January. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome FUTA Kiwi Show. We are also having a conversation about the FUTA and SUTA, and we are giving a tutorial on the small business federal employment tax. And so let's talk about filing Form 940 now. It's very important. So 940 is the quintessential form that you need to file at the end of the year. Okay, so this form is due on January 31st of the year after the year of the report information. So for example, the 940 for 2022 is due January 31st, 2023. And the best way to file is to do IRS e-file. Okay, so the calculations for FUTA tax are complicated. So you need to have maybe a payroll processing service that can help you figure out how much you must pay every quarter and when. Okay, so I want you to look right now. Here is a form, the FUTA tax form on the screen. So to file the Form 940, you need the total FUTA payments you have paid and owe for all employees for the calendar year, the total value of exempt payments for the year. So these are typically, as I said before, fringe benefits like employee health and retirement plans, and the total payments you made to all employees in excess of $7,000 for the year. So here is a breakdown of the key parts of Form 940. I want you to right now to look on the screen. Look on the screen. So you have your EIN, your employer identification number, your name. Okay, so you want to put your trade name, that's your business sector, your address, your company's address. And on part 1, you want to tell the IRS more about your return, okay? And on part 2, you need to determine your FUTA tax before adjustments. So here you have to put total payments to all your employees. On line 3, payments that are exempt from FUTA tax. That's what I said before, okay? On line 4, and you want to check whatever applies on that form. So this is important. Here you see all the total payments made to each employee in excess of $5,000. And so this is important. So this is, you can see part 2. Let's go to part 3. Part 3, you need to determine any adjustment that you may have. Part 4, you need to determine your FUTA tax and balance due or overpayment. Remember, every quarter you have to send the IRS a check, and if you overpaid or underpaid, you're going to have to make the adjustment. And on part 5 here, part 5, you talk about, you just mentioned your tax liability by quarter, okay? And in part 6 here on the screen, as you can see, you have to, if you have a third-party designee, then the IRS, this could be your payroll processor, your payroll processing company, then the IRS wants to have authorization from you to contact them directly. And on part 7, you sign your name, and you also let the IRS know the best time to contact you should they want to contact you. So the deadline for filing Form 940 is January 31st. Let's talk about SUTA. So I've talked about FUTA, and let's talk about SUTA. So state unemployment taxes. So both the federal government and most state governments collect unemployment taxes, and the federal government collects unemployment funds and pays into state funds, known as the state unemployment tax, SUTA. The federal funds help to supplement what the states collect. Okay, so many employers pay both federal and state unemployment taxes, depending on what state you are doing business in. So to find out if you, as a business owner, need to pay state unemployment tax, you want to contact your state's unemployment agency. So if your state collect this tax, you will need to register with your state. It's very, very important. And all businesses with employees must get a federal EIN to be used for all employment taxes. So this ID number qualifies as the registration for your business and federal unemployment insurance payments. So you need to understand. So what's the bottom line? The bottom line is that each state has its own unemployment tax as well. So SUTA stands for State Unemployment Tax Act, which funds state unemployment insurance. Okay, SUTA is almost always paid by the employer, with the exception of Alaska, Pennsylvania, and New Jersey, where the cost is shared by employer and employee. This is really important. And so one thing I want to say here is that there is a difference between SUTA and FUTA. So many states collect an additional unemployment tax from employers, right? And whereas the rate for FUTA is 6%, the rates for SUTA ranges from 2% to 5% of an employee's wages. So it's important to really see the dichotomy here, the contradiction here. I mean, it's not really a contradiction; it is a contrast. Okay, and so, but some states do have a tax credit. This is really good to remember. So paying SUTA taxes can lessen the burden of FUTA taxes. Employers can take a tax credit of up to 5.4% of taxable income if they pay state unemployment taxes in full and on time. So this amount is deducted from the amount of federal unemployment taxes owed. Very important. So an employer who qualifies for the highest credit will have a net tax rate of 0.6%. So this is 6% minus 5.4%. Thus, the minimum amount an employer can pay in FUTA tax is $42 per employee. Think about it. This is $7,000 multiplied by 6%. However, companies that are exempt from state unemployment taxes do not qualify for the FUTA tax. Let me give you a bonus before we close today's conversation here. It's really important to understand that there is a difference between payroll taxes and employment taxes. Okay, so payroll taxes and employment taxes are taxes that employers pay directly to the Internal Revenue Service. So there is an overlap between these taxes, though there is a slight difference in where these terms are used and what is usually meant by them. Okay, so employment taxes are paid to the IRS directly from the employer. Employment taxes include federal income tax, Social Security, and Medicare taxes, and federal Unemployment Tax Act taxes, FUTA taxes. So the definition of payroll taxes is a bit loose, but generally speaking, this term refers to a subset of employment taxes that appear on your paycheck, and this includes things like Social Security and Medicare. Okay, those are really important. So when we talk about employment tax, we're speaking about federal income tax, Federal Insurance Contribution Act, the FICA tax, your Federal Unemployment Tax Act, the FUTA tax, and additional Medicare. So those are really important to understand. And so FICA taxes are federal survivors, old age, and disability insurance. In other words, Social Security taxes and hospital insurance tax known as Medicare. So these taxes are also withheld from employee pay and paid to the IRS. And so you also need to think about additional Medicare tax. This is really important. And so when we talk about payroll tax basis, remember that payroll taxes are a subset of employment taxes, but the definition can actually range from anything to anything. Definition can change depending who you ask, really. And so when we talk about employer tax obligation, you have to actually take care of your payroll taxes also. So if you have payroll taxes, you're going to have to file Form 941. Okay, so the form should be filed quarterly with the IRS to report the taxes that you have been withholding. Okay, and you also have to deposit. You have to think about the timing where you have to deposit the employment taxes. So employers must deposit any federal income tax withheld, the employer and employee portion of Social Security, and the employer and employee portion of Medicare taxes. So this is important. Thank you so much for your attention. In today's conversation, I was giving you a quick tutorial on FUTA, federal unemployment taxes, and we spoke about the process, FUTA Overview, FUTA Calculation, FUTA Payments, FUTA Filing Form 940, FUTA Overview, and the bonus. Thank you so much for your attention. I really appreciate it. I'll see you next time. But until then, remember, stay marvelous.